Fortinet is down almost 25% as I am recording today's episode. I think that's insane. The company lost more than almost a quarter of its valuation. And on today's episode, what I want to do is take a closer look at their earnings and try to understand what happened and what is causing this overall kind of drop in the stock. Let's take a closer look in today's episode. All right, so I have this pretty cool presentation of what went wrong, some of the questions, and what's impacting the overall company. So if we take a closer look, earnings per share, the company did beat analyst expectations. Unfortunately, when we take a closer look at revenue, it did not meet analyst expectations, and that was one of the first red flags. Now, there were some other red flags for future guidance. Here, I'm taking a closer look at what analysts were expecting for the current quarter, which is going to be the next quarter they report, and the current fiscal year. So for the upcoming quarter, analysts were expecting somewhere between $1.378 billion in form of revenue for that quarter. And we can see when Fortinet kind of gave us the guidance, they expect more of 1.375 on the top end. So not even the top end is meeting the average here with what analysts were expecting for the upcoming quarter. There's not too much of a shortness, right? It's not a big drop there, but unfortunately, right, you don't want to see that. Now, if we take a closer look at the overall current fiscal year, analysts were expecting somewhere between $5.458 billion. Again, Fortinet, not too far off. They kind of, that top end guidance barely missed it, but still missed it nonetheless. So overall, we can see, right, earnings per share were profitable and did beat analyst expectations. But when we look at quarter two guidance, when we look at quarter two revenue, it missed expectations. So when we take a closer look at quarter three guidance and quarter four and full year guidance, we also see a miss in expectations. So obviously, that is what's causing one of the fears in the stock price right now. But some of you might be wondering, hey, Jose, those misses aren't necessarily that big of a deal. It doesn't seem like they're down by billions of dollars. It's by a few millions of dollars in the top end that they miss expectations. And I do believe the real question is there is some slowdown happening, and we're going to see that in a bit. And the question is, how long is this slowdown going to last? And I do believe that's what's kind of scaring a lot of investors. Right off the bat, we do see today a lot of price targets were decreased. TD Cowen, for example, from a $90 to a $70 stock price. Regardless, the stock is sitting below 60, so this is still bullish. We also see other companies, Raymond James went from a 75 to a 70. We also see other players kind of decrease. Morgan Stanley went from a 84 to a 80, and other players also kind of decreased their price target after earnings. So not only do you kind of get that negative sentiment from the stock and from its guidance, but you also get that negative sentiment from numerous analysts that are reducing the price targets. Now, if we take a closer look at numbers here, we can kind of see the slowdown. So revenue, the company grew 25.5%. That doesn't seem great. That doesn't seem bad, right? I mean, normally it is growing in the 30% or in the high 20s. Usually if it's in the 20% revenue growth, it's the lowest we've seen since quarter two of 2021 was 28.6, where now it's sitting more of the mid 20s, right? So we can definitely see a bit of a slowdown happening in kind of revenue growth compared to previously. The other thing, and I do want to say this is probably the biggest change, is billings, right? Billings, this is for upcoming product sales or what they kind of grow up right now. Billings were 18.1% year-over-year growth. This is one of their lowest billings quarter ever. The previous one since quarter two of 2021 was 29.6. So we definitely see that slowdown, and that is a massive deceleration compared to where the company has been. And this is one of the things that's really causing this fear in the stock price. Again, I don't believe it's the actual numbers drop. The real question is how long is this going to last? And I do believe, I do want to say, unfortunately, Fortinet and management didn't really give us an answer to say, hey, look, this slowdown is going to last only one quarter. They do believe it can last numerous quarters. So I want to explain why there is a slowdown. But before we go any further, guys, if you are enjoying the episode, make sure to hit the thumbs up. Also, this is a new layout of episodes. If you are enjoying it, let me know on the comments below. If you want to learn about the semiconductor market, I do have a membership program. Make sure to click join. And finally,
Finally, I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so they do mention that regarding the second quarter, they believe that macro uncertainty impacted their billings performance through average contract duration. And in the second half of June, an elevated level of enterprise deals pushing to future quarters. So we are seeing a bit of a slowdown in there, and those kind of contracts that were expected to close in June are being pushed out to future quarters. So we are seeing kind of that slowdown due to macroeconomics. They also saw shorter contract duration, with the average term decreasing by 1.5 months to 28 months, creating a 4 to 5 point billing headwinds over the year. They are also seeing some level of enterprise deals pushed to further. They do mention that usually these deals being pushed to future quarters is not unusual. However, an unusually amount of large volume of deals that they expect to close in June are now being pushed to future periods. So normally it's not unheard of to kind of see some products, some deals being pushed out a few quarters. What's really crazy is the amount of volume that is happening right now, and that's obviously pretty scary. And the real question is, they don't really give a guidance of when they're going to kind of see that. They also mentioned that billing growth by geography is changing. They do mention that right now the ones that are really leading a nice growth is Europe and Latin America, but the one that's kind of seeing the biggest challenges right now is the United States. Now, there was a few questions here in the Q&A session, and they pretty much ask, hey, first, it seems like right now the market is bad. They mentioned that the first one is Palo Alto, a competitor of them, is posting their quarterly calls for a Friday evening, which is always a bad sign historically for the quarter. I didn't know that was the case, but obviously seeing on a Friday night, that might kind of showcase bring even more fear for this overall market. And then you are reporting weaker than expected. Although you were very positive last quarter, what has changed in the last 3 months? And if the environment has kind of shifted, what is the source behind it? And the second question is, we did hear, right, that a lot of these projects are being pushed down a bit. And the analyst was wondering, hey, you're saying that they're being pushed out a bit. So obviously I understand why we're getting maybe a weaker than expected quarter three, the acceleration. But you're also giving us a full year kind of deceleration to some extent. Shouldn't just the projects be pushed down from the third quarter to the fourth quarter? So it should be like some form of net even at the end of the day, right? And so I do believe these two questions were pretty helpful. And here, let's take a closer look at the answers. So the CFO did mention that, hey, at least in July right now, they are seeing some of the deals getting close, which is a positive sign. But they don't believe this is just going to be where things are getting pushed out from quarter three to quarter four. They don't believe it's going to be a quarter recovery. They think it's going to take a little bit longer through this kind of economy and before things normalize, as well as kind of inventory digestion. So even though things are being pushed back, pushed out, it's not like they're only being pushed out a quarter. They're being pushed out to an unknown amount of time. And that, again, is creating a lot of uncertainty for the overall stock. And then they were mentioning that large companies are a little bit more tight on budget as well, and they are taking a little bit longer on time to close deals. And they mentioned it's not just this quarter, basically pretty much starting earlier this year, there is some sign that they're going to continue to see a bit of a slowdown here, and they don't know how long this will last. It's going to be very, very tough to say. So again, I do believe what's really driving the stock price right now is the uncertainty. But I do believe this uncertainty is probably more of a big deal if you are a short-term investor opposed to being a long-term investor. So that's pretty much what's kind of impacting Fortinet right now. I do have one kind of bullish trend later on. If you guys are enjoying this video, if we get some strong feedback, I maybe want to do a video on some reasons to buy this stock right now. But let me know in the comments below if you guys want to see that. I do want to share one small bullish point here. So they did mention that this quarter, the company did not repurchase any amount of shares under the repurchase program during the past 3 or 6 months ended in June 30th of 2023, which I thought was pretty interesting. So this company did not buy back any of the shares, but They did mention that about a year ago, during the 6 months ended of June 30th of 2022, they bought roughly $1.5 billion worth of share at an aggregated price of roughly $57.82. And this company has roughly $2.03 billion available for future share repurchase. And I want to say that the company, with the current price right now of $57.12, it kind of shows me that maybe this company might be a little opportunistic with the prices right now. And I wouldn't be shocked if in quarter 3 we do see a nice amount of that kind of purchasing power that they had, that roughly $2 billion be used, maybe not fully, but I do believe a good amount is going to be used within the upcoming days as this company does some form of buyback programs. Maybe that might not be the case, but in my gut feeling, seeing how much they purchased about a year ago at what price, kind of showcases that, hey, this company might be a little opportunistic and they might end up purchasing some of their shares with the current price dip. So again, if you guys want me to do a video explaining maybe some reasons to be bullish in this company right now, let me know in the comments below. Today, I just really want to kind of showcase what went wrong with their earnings. So take care, have a good day, and see you next time.